understand the economy, you have to understand human nature.
This podcast is powered by Acast.
How are you doing there? It is podcast time, and we have a really fascinating, well, I think it's a fascinating podcast for you today. We're going to go very broad, then we're going to go very narrow. We're going to go broad in the sense that...
Looking forward to it already.
In the sense that in all the machinations and the trade and the Trump and the WhatsApps and the social media and the Truth Social and have we got a deal, have we not got a deal, and the usual Trump, pretending to fix something that he broke himself and then call it a deal. We know all that, right? Okay, he's been doing that all last one.
Yeah.
What about the nuts and bolts of the economy? And there's a bit of news which I want to flag, which came out the tail end of last week and very, very little real analysis of it. And it was that Moody's, the rating agency, downgraded the United States from AAA, as in the gold standard, so to speak, of debt, to AA1.
Yes.
So I want to focus the first part of the podcast on that big stuff, which is the nexus of debt, growth, interest rates, deficits, the dollar, and the overall financial health of not just the United States, but the entire edifice of a financial system that has been gorging on debt, arguably, John, since certainly 2008 and rapidly during the pandemic when interest rates went to zero. So I want to just flag this. Second thing, John, I want to come back home. There was an extraordinary example of the hypocrisy and dysfunction of the Irish property market. And again, the nexus of property, of the people who purport to be on the side of rebuilding Ireland, of this state, and of the lamentable state of dereliction in Ireland when a cottage or a set of cottages on the canal in Dublin. So we're going to go from Wall Street to the canal in Dublin. Bear with us, right? A set of cottages fell down last Monday morning, 8 o'clock rush hour. The cottages just fell in. And who owned them, John? Who owned them?
Go on.
The Construction Industry Federation of Ireland, which is the state-sanctioned lobby group that is supposed to represent builders, who are supposed to be the people who are going to rebuild the country, who are going to stamp out dereliction, who are going to stamp out vandalism, who are going to be animated by vacancy, and who are going to save us. The very lobby group that represents Irish builders was the owner of a series of buildings in a prime location in Dublin that has been allowed to go to rack and ruin against a background, John, of news that rents on average in Ireland have surpassed €2,000 per month for the first time ever.
I know.
So we have a whole gamut of stuff to get through today, John. But listeners, you can get angry. You can get indignant. You can go for a pint. You can...
console yourself in a pint.
You can console yourself in a pint. But this story is a microcosm of everything that is wrong with Ireland. We do many things well. We do many, many things better than many other countries. And as you know, I'm on a little bit of a world tour at the moment, so I'm seeing the way other countries run.
Yeah.
But I'm not sure that anybody does hypocrisy as well as Ireland. I'm not sure. And I'm also not sure...
Well, Trump, but anyway.
Yeah, but there are consequences for Donald Trump. I'm not sure there is a society that has a housing problem that is so egregious and so undermining of people's quality of lives. And yet, at the very, very top, the interaction of the Department of this, that, and the other, the state, the Confederation, the sort of what I would call the sort of the IBECization of the economy, the lobby groups of the big wigs, all of which say one thing and look the other way. It's the great Irish expression of talking out of two sides of your mouth, which is one of the expressions I love. So we'll talk about that. But first, John, Moody's was interesting you.
Yeah, Moody's, Mac. I read this last week as well, and I stuck it in my back pocket as something that I wanted to ask you about because it seems like a big deal. Although, as you say, there's wasn't a huge amount written about it, talked about it, certainly in the stuff that I've been reading. But explain to me the significance of this, because, is this the first time that America has been downgraded?
No, it's not the first time. It was downgraded after 2008 as well, but it was downgraded after 2008 where there was a fellow called No Drama Obama in the White House, okay? I don't think you can describe our good friend as no drama, this fella, right? Let's look at what's happening. Right? You have a 28, 29 trillion dollar economy called the United States, right? With $35 trillion of national debt. So already the national debt is greater than GDP. You have $2 trillion of annual deficits being incurred all the time. That's despite money that they hope comes in from tariff and despite the cuts they hope come in from Doge, right? They're still running an annual deficit of 2 trillion, right?
Yeah.
And the rate of interest today, the 10-year note is 4.1%, which means that every single year, the Americans have to pay in interest alone about 1.2 or 1 trillion dollars in interest alone, which is more than they spend on their entire military budget. So
that's outrageous.
I want listeners to absorb this for a while, right? All the while, the dollar is the reserve currency. That's the first thing. So Moody's, I think, in fairness to them, I was surprised that the rating agencies actually came out and actually said this because so many people are afraid to actually say the obvious, right? Like the Republican Party has turned into a Maoist cult of Donny J.
Yeah.
Absolutely. It's no longer the pragmatic party that was full of people that actually had economic views, that had a long-term perspective. It's a cult, right?
Yeah.
So they're not going to say it. The Democratic parties are disarray, complete disarray. So what you have is you have the markets and Moody's focusing people's attention on a debt to GDP ratio, the dynamics underpinning which are moving rapidly in the wrong direction. So again, when you've got those sort of debts, right, and you've got that type of debt servicing every year, you need your interest rates to be falling.
Can I just ask you, just before you go on, explain briefly how the ratings agencies work? What do they base these decisions on?
So the rating agencies would look at that sort of debt dynamic that I just focused on there, which is you have an annual budget deficit of about 2 trillion. This is before Donald J presides over tax cuts, right? Which will expand that budget deficit, number one. You have a rate of interest of 4.1%. You've 30-year money at about 5%. So it means that your annual amount of money that the American state is paying out in interest alone is profound and is getting bigger. You have a currency that is weakening. And you have the prospects of higher inflation because you have a tariff regime that we know is inflationary. Now, who knows what the final tariff figure will be? But what we do know is that tariffs are inflationary. Why? Because they are a tax on spending. That's all they are. They're a direct tax spending.
Yeah. They're passed on to the consumer.
Producers have to pass these on and importers have to pass these on. And what typically will happen in America is the importers will pass these on. Otherwise, they themselves will go bust. So what you have is a sort of a cocktail that in a normal period would be very, very tricky. But we're not in a normal period. Take all this on top of the fact that the leading indicators for consumer and producer and industrial confidence are falling. And what you have is a situation, and you have a global trade war, which in itself is detrimental to global growth. And these are the things that Moody's will look at. They'll also look at, John, which is the refinancing of other debts in the United States. So the back of the envelope calculation is the Americans have to refinance about 7 trillion of other debts this year. Now, that would be like just mortgage debts. So you might, for example, have taken out a 3-year balloon payment mortgage. What they say is basically the first 3 years you don't pay very much, and then it starts to pay a bit more, the next 3 years. So That's one. Then you've got massive auto debts. The American automobile market is entirely financed on tick. You've got student debt. There's massive student debt out there. You've all sorts of junk bonds that have been issued by companies. You've all sorts of asset-backed securities. You've all these things. So, the fear is, and what the ratings agency will be looking at, is that the figure of 35 odd trillion, which is the national debt, is the tip of a debt iceberg.
Yeah.
And if you have an economy that's slowing down, it's already at full employment, you kick out all the immigrants, and who's going to build your houses, who's going to mow your gardens, who's going to actually do the laundry, all those jobs that a lot of illegal immigrants did, that pushes up wage inflation, and all those things against a background of, again, still not so much chaos in the White House, but anxiety in the White House, eroding consumer and business confidence.
Yeah.
They're the things that Moody's would have.
But do they have a specific, is there a formula or?
There would be a formula, John, and they'd be like, if this is going up and that's going up and that's going up, well, then that has to go down.
Yeah.
But then, this is interesting, then there would be discretion, right? And discretion is probably more revealing here, which is those big companies are very big players in American finance. Up till now, there has been a reticence to actually tell the emperor that he doesn't have any clothes. There's been a reticence to tell Donna, you're not the genius you thought you were. Interestingly, I think it's an interesting straw in the wind that an outfit like Moody's would risk confrontation with the White House, but probably think the situation is so reckless that they have to, for their own credibility, move now, just in case over the summer all these things smash into a brick wall and you get a financial crisis. Remember, we talked about the extinction event that I think is going to come in highly leveraged parts of America.
Yeah.
The rating agencies have to be ahead of the curve on this.
Okay, that begs the question, who is Moody's? And what gives them the credibility to rate countries?
Okay, so Moody's would be a bunch of economists, accountants, bond market participants, finance players, etc. And they would be doing for the private sector what economists in the Department of Finance will be doing for the public sector, which is warning politicians that, listen, things are out of sync, you have too much debt, you don't have enough income. The sort of things that I would have done years ago when I was working in banks, right? You'd go look at a country, you'd look at the productive sector, the banking sector, the taxation system, the intersection of all of them, the existing amount of debt that's out there, the rate of interest that's out there, the rate of inflation, and you'd make a judgment call on how all these are going to impact on the ability of the private sector and the corporate sector to pay debt, not today, but in the future.
Yeah.
So that's your job. And it's quite complicated.
And who pays them? How do they make money?
So the rating agencies are paid by people who issue debt. Now, this is where there is a massive potential for a conflict of interest. So in the case of Ireland many years ago, the rating agencies were paid by Anglo-Irish Bank to rate the debt that Anglo-Irish Bank was actually issuing.
Okay.
So that's why there was a massive. Now, they say that they've actually flushed out this bad behavior. I'm not too sure. But my point is, but you're asking how you get paid, right? You get paid. So, for example, if I issue debt, let's say I am the Irish government or an Irish corporate, and I issue debt into the market, that debt needs to be rated. It is rated by the rating agencies. So they are basically on the side of the issuers of debt. But they're also paid by people who buy debt to give those people who buy debt the reassurance that they're not buying absolute shite.
Right.
So there's two sides to the equation. They're paid by the issuers of debt to acquire the debt rating itself, number one. But number two, they're also paid by investors to give investors some sort of succor that they're not buying a crock of shite. Now, of course, the problem with this is that if there's lots and lots of assets that are rated the same, what you can do then, John, is you can amalgamate all those assets together and create an even bigger debt pool. So that's one of the dynamics. There was a thing you might have remembered if you watched The Big Short of collateralized debt obligations. So it's basically more debt on debt on debt, right?
Yeah.
So once you're dealing with debt, you have to focus on one thing and one thing only is, can this stuff be paid back? And if there's a shock to the system, how much debt will not be able to be paid back?
So when you mentioned the Big Short there, when they gathered up all of those subprime mortgages into one big pile, who rated that? Was that Moody's or one of the... And they clearly got it wrong.
Well, not only did they get it wrong, they got it wrong and they were paid up front to get it wrong. I mean, that's the big scandal. That's the big scandal.
So there was no repercussions for them or what?
Very, very few. There was lots of, people were told to go off and play golf and, retired out of the corner office early with nice packages. I mean, there is a reason that the finance industry, remember the West Upper, John, our piss take in the West Upper?
Yes, yeah.
There is a reason for that. It's an industry that feathers its own nest.
Yeah.
The great expression were, where are all the clients' yachts, which was the great expression, right? So basically the finance industry takes money from clients, makes itself rich. And that's why a lot of interesting characters are sort of renegades in the finance industry, because they understand that the potential for corruption is enormous.
Yeah.
But be that as it may, the fact that Moody's risked a confrontation with the White House and actually has gone out now and said, do you know what? America's debt rating isn't as good as it was this time last month. I think that's a significant moment. Now, the markets also think it's a significant moment because long-term interest rates have increased, the dollar has weakened, and they're the two basic canaries in the coal mine, because that's what you watch all the time. Now, I think what's also fascinating the last couple of days, John, last couple of weeks, is the way in which financial markets operate. There's obviously a whole bunch of day traders in financial markets who are reacting to Trump says tariffs on, we sell everything. Trump says tariffs off, we buy everything, right? Now, this is the way in which you can gauge volatility at the very, very top. And the more volatility there is, the less direction the market has. And I think we're obviously in one of these worlds where a whole host of lemmings are operating in the frothy end of financial markets, which is why it's going up by 20%, down by 20%, up by 20%. It's what I call the lotto approach to investing, right?
Yeah.
Okay.
Yeah.
It could be you, right? The lotto approach, the news is good, right? Whereas the value approach to investing is what we're trying to get to, John, which is look at the matrix of debts and et cetera.
Yeah, the real world stuff.
At the end of the day, equity is only a fancy name for hope, right? You're just hoping to God the company you buy is going to be okay.
Yeah.
But I think it's important for the podcast to actually inform the listeners that all this stuff is going on in the background. And with all the noise coming out of the White House and the noise coming out of Beijing and the noise coming out of the Kremlin and the Middle East and the Gulf and all this, let's focus on the knitting that a debt day of potential reckoning has been brought marginally forward by what we've seen the rating agents doing. And that is of enormous consequence to a huge amount of borrowing that went on during the pandemic for private equity, John, for unicorns, for Silicon Valley, for illiquid high-end real estate in the United States, which you cannot sell if there is a credit crunch. And I think watch all the above. Watch all of the above as we go into a summer, which I suspect could well be a summer of discontent. It'll be marked by, there's going to be another annual jamboree, which I think China and America, Xi and Trump are meeting, Ramaphosa, they're all meeting. But look, that's only talk. The economy doesn't just respond to talk. It responds to real stuff. So let's keep our eyes on the real stuff.
Yeah, that really is fascinating stuff, Mac. It's a whole world that is so unfamiliar to most people, but it affects everybody at the end of the day.
It does. And I suppose I've just spent so much of my life working in that business, and observing it.
But the other thing that we need to keep our eyes on is collapsing houses.
Oh, man, John, the collapsing houses in the canal in Ranelagh.
But before we do that, let's have a chat about that after a bit of this.
Okay.
Mac, we started off talking about the Construction Industry Federation of Ireland and their negligence or their lack of building acumen when it comes to their own property.
It's terrible. No, John, this is a story. So let's just, we gave you the outline at the top of the show. Very briefly, Dublin is a city that is falling down in front of our eyes. It is blighted by dereliction. It is blighted by vacancy. And I refer to this as antisocial behavior. So when we think of antisocial behavior, we usually think of a bunch of lads in North Face jackets, the hoods up, annoying people, throwing shapes, selling drugs in the corner, undermining the social cohesion of an area.
Yeah.
I think a much more significant or equally as significant antisocial behavior is the behavior of wealthy people who are allowing the city and their homes in the city and their buildings to fall into dereliction, dilapidation, so much so that they are falling down.
Yes.
I mean, people outside of Ireland might not realize Irish buildings are falling down. In one of the richest countries in the world, the country with one of the most dynamic economies in the world, the country with one of the most buoyant tax systems in the world, the company that is attracting in talent from all over the world, it is actually falling down. Now, that only makes sense if the people who are charged with owning the buildings are delinquents. And I use that word advisedly. This is delinquent behavior. Why, John? Because owning a property is not just a balance sheet. You are the custodian of the urban environment.
Yeah.
You have a responsibility to the urban environment. And if you are degenerate in your behavior towards those assets, you should be treated like a degenerate. And it is time for us in Ireland to put a price on the choice that these people make, which is dilapidation. So the basic idea, John, is dereliction bad, refurbishment good, right? Dilapidation bad, rebuilding good. Now, the question is, who is making the choice? And I come back to that word choice. It is a choice to allow a building become vacant and become derelict.
Pretty much, yeah.
Well, it is a choice. You have a choice. And we need now to put a price on that choice, which is not only to tax those people, but tax their worldwide income. Because what happens in Ireland is they will say, oh, well, we'll just set up a little company, right? And that company will just own that property. And then that company then will have no money in it. So that company can't really be fined, but it can be fined, but it's got no way of actually paying. And the person or persons who own the company have various other incarnations that are very financially flush, but you can't get at them. So we've got to have a tax system that sees through the shelf company and goes to the worldwide income of the delinquent owners. Because there are delinquent owners on the one hand, and there are responsible owners. And what we want is we want to have responsible owners, not delinquent owners. So hoarding of houses, derelict houses, begets more dereliction because it's like a virus, John. If the building beside you goes derelict, then you think, oh, you know what? I couldn't be bothered. The price of property goes down on the street. The street then begins to move into this downward vortex of people don't want to move into it because it looks so shabby. And before you know it, what you have is dereliction forcing more dereliction. So this has to be put to an end. And I think our state needs to find, like the Construction Industry Federation, it has now emerged, have had significant arrears in tax and fines owing to the council that they won't pay. So you have a state-sponsored body robbing another state-sponsored body.
Wow. Why won't they pay them?
Because they said they couldn't be fucking bothered. because, and the council don't have any way of enforcing it. They send them letters.
It's the enforcement thing.
We have to change the law that the enforcement is straight away, and it's your worldwide income that is affected.
Okay, so how easy would it be to change the law so you can go after worldwide income?
Simple. This is about naming and shaming. It's a combination of those people. The reason the Construction Industry Federation are so nervous is they've been exposed. They've been named and shamed. And they're also really hypocritical because they're actually representing builders, but they're standing over dereliction, right?
Yeah.
So what you need is a change in the law, like the CAB. Do you remember the CAB, the Criminal Assets Bureau?
Yeah.
Exactly the same thing. People say, oh, you can't go after the drug money. Oh, because it's too complex. No, fuck it. You can go after it. You set up a quasi-criminal unit of cops and
Yeah.
accountants. And that's a terrifying combination. Coppers and accountants, right? And you go after them and you treat people with derelict properties as criminals, as degenerates, as reprobates, and as people who are involved in antisocial activity. And before you know it, those people, because those people are playing golf, John.
Yes,
Those
yeah,
people
yeah.
are out, swanning around swanky restaurants, right?
I can see
Very
the
soon.
force turning up on a dawn raid and bashing in somebody's door and taking their golf clubs. What
You
could
take
be
your
worse?
golf clubs, and your membership of some swanky place, right? And your yacht club, right? And your season ticket to Leinster, John.
Yes,
You go for the
your seat in the West Lower.
The West Upper. Okay, so what is at stake is not only your reputation, but your season ticket seat in the West Lower, right? But literally, you need a fucking Elliot Ness type character.
Yes,
right?
yeah.
To own this. So somebody, when they're waking up in the morning, says, I'm going to go after that delinquent, right? And the CAB is the model because it was a statutory body which was set up after the murder of Veronica Guerin because that triggered the moment where the state said, look, enough of this. We need a CAB to go after real estate delinquents and we need to name and shame them. But I have another possible solution, John, which is the Catholic side of me wants to forgive people. I am a man of great mercy. As you know, John,
You've been affected by this recent new Pope.
I've been affected by the recent new Pope on my visit down to the Dutch Reformed Church last week in South Africa.
Yeah, exactly.
I'm a great believer in the fact that people respond to incentives. And if you give people the incentives to do the right thing, they will do the right thing.
Yeah.
And I think there are many, many hundreds of people who have inherited properties. They might not necessarily have the income. There might be a family problem that one brother doesn't want to sell and one brother wants to sell. It's a legacy property in the family that comes from an uncle or an auntie. They can't find the right title. So let's assume that there are some innocence in this delinquency. But also let's put at the very forefront of all our thoughts is the common good, not the individual good, the common good. And what I think we should do is say, we're going to come after you with a CAB, Criminal Assets Bureau type investigation, and we're going to find your worldwide income in the same way as we went after Gilligan. And when Gilligan and others were trying to hide their money in Spain, the Irish cops went after them and got the money in Spain, right? Yeah. Same sort of idea. When they've little shelf companies and they've little accountants and everyone's employed to try and disguise and get straight through it. That's why we need a highly, highly committed, focused, incentivized, criminal busting police and Gardaí and accounting unit to come after these guys, number one. But number two, give people a chance. Give people a chance to get their house in order and settle their affairs.
How do you mean?
We should issue an amnesty this year and say, we will not fine you. We will not come after you if you fess up to being on the dereliction, because the council has a dereliction index, right? Which is basically identifies buildings as derelict. We will give you a year in which to sell your property, and we will give you an amnesty. And if you take up that amnesty, you're away, you're clear, you're scot-free, your reputation is fine, your taxation is fine, and you can sell the property. And what that would do, and the reason this is important is that Irish people love an amnesty.
Yeah.
There was a massive tax amnesty in the early 90s, John, when I was working in the central bank and the country didn't have any money. And we were like, where are we going to get the money? And they issued a tax amnesty for tax avoidance, right?
Yeah.
And they basically said, look, we know you're not paying your tax. We know you've got big tax liabilities. We won't come after you if you fess up. And I remember, let's say at the time, the central bank expected to get 500 million punts.
Yeah.
We got about 3 billion, right?
Really?
There was so much more money under the mattress, right? In Ireland. Like those figures are adjusted for today's things, but it was a huge amount, right? So Irish people love an amnesty. You come forward, you think, Jesus got away with that, right?
Yes, yeah.
And what would happen is an amnesty for derelict and vandal. Well, they are social vandals and urban vandals.
Yeah.
I think a massive amount of property would come on sale straight away. That would collapse the price of property in areas that needs to collapse in those dilapidated areas. And I think Bob's your uncle, we could start again. But we need to do it because having a situation, John, where the state-sponsored lobbyist for the building and builders of Ireland is sitting on property that is falling fucking down.
Yeah.
It's not even like derelict or slightly vacant. It's actually collapsing. In Dublin 6, for non-Irish listeners or non-Dublin listeners, Dublin 6 is probably the most expensive real estate in Ireland. Dublin 4, Dublin
lovely
6,
red
right?
brick
on
buildings.
the canal, all that sort of stuff. That is where we are. We need a new sheriff in town, John.
Yes.
Okay.
Elliot
Right?
Ness, where are you?
Elliot Ness, right? Who treats people and companies and organizations that are actively facilitating the destruction of our urban environment, be it Dublin, Waterford, Galway, Cork, Limerick, all these places. Drogheda, apparently the worst almost in
Didn't know
Ireland.
that.
Drogheda's streets are dilapidated, they're falling down, there's vacancy, etc., right? We need the price of those buildings has to fall. There has to be a fire sale. The fire sale will be precipitated by an amnesty. The amnesty will be driven by people's incentives not to be named and shamed and not to be paying the fines. And you clear the decks straight away. And it's like the Criminal Assets Bureau. And you start again.
Yeah.
And the price of season tickets for the West Upper might even go up again, John. I'll talk to you on Tuesday. Just before you go, an important announcement for next Monday, the 26th of May.
Yes.
We are back next Monday night with the podcast's book club, and we are doing, and this is not at my instigation, John, it was by popular demand. The book of the month is going to be a book by a fellow called David McWilliams called Money, A Story of Humanity.
I must read that someday.
You must read that someday. You've heard all about it. If you want to join us on patreon.com/David McWilliams. If you're already a member of the book club, we will see you on Monday at 6 p.m. Irish time. If not, and new members, we'd love to see you again. It is a hoot. Get yourself a glass of wine, half a bottle of beer, and we'll discuss Money, A Story of Humanity, which was, John, of course, the FT's Book of the Year, the Economist's Book of the Year.
Indeed it was.
The Prospect Bank's Book of the Year, yada, yada, yada. All right. We will talk to you on Monday night.